I think we're going to bring in our next guest, who says that there are more down days ahead. We're joined from Chicago by Todd Horwitz, Chief Strategist at BubbaTrading.com. Todd, good to be with you today. Thanks so much for being with us.
Great to be with you, Catherine. Glad to be back.
Good. Let's talk a little bit about this. The markets, if you just are kind of looking at the surface right now, they look okay, but I think that there's probably some jittery trading going on underneath the surface. What are you seeing?
Well, I think today's rally, the recovery was really not that big a deal. It came right down to support. You know, when you look at a market that's been just bouncing between levels, that was the very low end. So the initial rally isn't that big a deal. But there are so many things in front of this market that are going to be bad news for this market. And the first thing is going to be the rate hike, which you mentioned is 70% priced in. And the bonds are pricing in it. You know, the bonds have been pushing up rates by themselves almost every day. So that's going to be an issue, because if you look at the debt to GDP numbers, we're at record highs now at basically 0% interest. What's going to happen when we start getting even a quarter or a half a point higher? What's going to happen to that debt to GDP then? It can only create more problem when you don't create growth, and when you have a Federal Reserve that refuses to do the right thing when they're supposed to do it and stays behind the curve. It's very challenging to grow the market and see real, true jobs growth and company growth. We've got no CapEx spending. Where's it going to come from? And that is the real issue, which will lead to darker days coming soon.
But what's going to be the catalyst? Because, Todd, you know, a lot of people have been calling for what you're calling for, and it just hasn't happened. I'm not saying that it can't or that it won't, but I think it's been very frustrating for a lot of very seasoned investors.
You're 100% right. And listen, I've called it myself for quite a while and look for it. And of course, we continue to grind higher on that zero interest rate. But the catalyst, we talked about Deutsche Bank last time I was with you. And of course, out of the EU came the other day is that maybe the EU let Deutsche Bank slide through and didn't get the proper stress test. Maybe it's true. I don't know. It's only something I read. But maybe some of the banks in the U.S. aren't having this proper stress test. And maybe that comes up. Maybe that's the trigger. It's hard to figure out what will finally trigger this market lower. But we're getting a lot closer, because what you're having now is you've had a big shift of commercial investors are out and on the sidelines, and the retail margin buyers are the ones that are keeping this market floating higher. And we know that as soon as that changes, they're going to be forced to liquidate a lot faster, and we'll see a punishing market move down. Now, if we get a hike sooner, that will push it down. If the election brings in all Democrats versus a split House, that would really be something that would bring it down. And
well,
it may
Todd,
be something that we're not counting on.
Let me just stop you there as it relates to the Democrats in the House and whether or not they will, in fact, gain more control. And the reason why I think that's more in focus today and over the past couple of days, and we had a weak chart on the XLF, the financials, as well as the biotech stocks. A lot of concern that in fact, could happen, that Clinton win and Democrats control the Senate, and that they're going to be punishing the banks, and they're going to punish the healthcare companies, the farmers, and the biotechs that have been aggressive on pricing. If that's the case, I mean, that's why we're seeing these stocks down. But is that what you're hearing? Is that what you're seeing in the trading? What do you think?
That's a little bit about it. I mean, it looks like that could happen. Now, you know, they've got Clinton now. If you watch the betting sites, Clinton is a 1-to-5 favorite, which means for every dollar you get back 20 cents. So.
I don't watch the betting sites. Remember that was what Brexit was?
She's a one.
No way. And I think we do better analysis than the betting sites. That's why everybody has a job here, right?
Listen, I think Trump's going to win. That's my personal opinion. But in the meantime, I think that is weighing on the minds. You know, the biggest thing about traders, as you know, is the uncertainty of what might happen, instead of knowing. If you know what's going to happen, you can deal with it. If you don't know, you're always guessing. Now, the banks are dealing with a lot of issues right now, because they're not making enough money, right? They can't lend out enough because they won't provide liquidity. So if you get more regulations and you get Clinton in that wants to give more regulations to those banks, how are they going to make any money? And it's going to cause a big collapse in the system. And that's one of the problems. That's why tomorrow morning's banks' earnings are going to be interesting, because they have not been able to make enough money because they're not lending enough. So we'll see what that brings in. But if we do get a total Democratic run here, that would be very ugly. It would be very bad for the banks and the insurance companies, two places that need to be able to create money and get it on the street to churn their balance sheets so they can actually survive in business. And if they don't get that, it's going to be a real disaster, and that could be the trigger point.
So Todd, then what's your advice for your investors today?
For investors, if you're investing, you should either use some. I don't ever tell anybody to sell because I don't know when the top's going to be. You have to either set a stop underneath your position, use some type of hedging strategy, trying to use options to do that. I'm a fan that's staying in as long as I can stay in, and I have not sold my long-term portfolio. I've not changed it. I'm going to continue to ride the wave as long as it goes. Now, there's other ways that I can get short to protect it, and that's what I do. But I think you have to hedge your portfolio or use some sort of stopping mechanism to take you out to avoid the major collapse. Now, one thing I do want to warn, the major collapse is not going to be in one day. You're going to have an opportunity to sell your portfolio. It will be up to the individual investor to recognize that the markets are starting to move lower and that they should start to look to liquidate out. But never panic and don't think that you have to sell today, because even if we sell off tomorrow, I guarantee there'll be a rally back in there to help you to get out later. It's the personalities later. It's the fear and greed that drive after that happens, and that's what I would watch for.
All right, we got to leave it there, Todd. Nice to see you. Thank you.
Thanks, Catherine.